What's going on, traders? Hope you're all doing great, and I'm doing great as well. What a great month it has been in September, and now we are into October. So I thought of just making this recap. Technically, there were 3 trades from last week, but because of my rules, I don't normally count each trade from last week, even if it happened to be in that particular week. So technically, I've taken these 2 trades on October, which is on GBP USD and USD CHF. And then from September, the one which technically was the last day of September was USDJPY. So I thought of making a recap into both of them, because one position I'm still holding in USD CHF, which technically is now running roughly around 2 point something percent, but I've just left my stop loss to break even, and I'll be managing that after the market opens. Okay, now let's go straight forward into USD JPY position from last week, meaning this particular week, which was late September time, right? Now technically, most people, this is what I wanted to share. Okay, this is what I wanted to share with you guys. So technically, from the higher time frame, we can see that previously price did something like so, and we broke this particular price in form of this structural approach, and then this was a clear impasse, and then this was the correction, which evolved again into another correction. So it's overall this piece of price action is just a correction, but if you do the pattern separation, you will understand the logic behind the position. And basically speaking, as for now, we can see that makes a lot of sense to us, because we are still in a corrective state, and where price came from and where we are at a good area volume. Okay, that's what the number one thing. Then looking into the structure, we can see that we had this particular expanding structure. And what have I told you about the expanding structure? When they happen at the edges of the price or at the bottom of the price, they give us a turning point message. However, when they happen to be into a run like so, they're acting as continuation, and we can see this is acting as a continuation. Why? Because as we can see, even if we took that particular angle over there or took it from there, it doesn't change anything. But the point is that after price in passing to the downside, we can see it turned into this larger correction. So we are into a correction state, which after doing the pattern separation, we can see the logic behind over here is now giving us a better edge or a better message at this point of just still pushing to the downside. Basically, if you look on the candles, you would have seen that before the market just started in passing, we had this. Okay, we closed with something of this sort, which is what we call what? Evening star formation. What the evening star formation are telling us, the message behind it is always a sell off. So we are good. And then we decided to opt to move into the H4 time frame, whereby into the H4 time frame we saw a clear confirmation into the price. Okay, now if we just look into the H4 time frame, we would have seen that before we saw that the price gave us the message that it's coming to an end by showing us that 1 2 3. Okay, and then after the third touch, we saw there was a clear impulse to the downside, and now we are into a continuation state to still proceed to the downside. Okay, that was a clear clue, which in addition to that, we had this as a left shoulder head, and then that as our right shoulder. So that was a clear confirmation that we are coming to the downside. What do you need more to see a straight setup that is a high quality setup? It's just a matter of understanding when and where to apply the rules, right? Then over here from the H1 time frame, then this is what I was telling you into the evening forecasting. If you guys can remember, that the price will likely mimic what it did over here, because the price normally likes to mimic what it did previously. Okay, so that is what exactly happened. So from the sequence standpoint, we can see we started with the 15, and what I told you, when you see the 15, what next type of continuation are you anticipating in the first place? You normally more often than not expect 1 hour continuation, and that is what we exactly got. Now some of you were thinking of that, this is more of a three touch, this is more of a. Now I will just open your mind and give you something as a clear lesson. Okay, you cannot count this as the three touch, because this piece of information over here, they are very close to one another. If that was the touch and then the next one was here and the third one was over there, that could tell us a different message. But the fact that they are very close to one another, I saw it personally as more of a two touch, so we count it more of a two touch. Now into two touch, whenever I'm taking two touch, first, the number one thing I normally look it when it's high up in the run, like so. And what told us we are high up in the run, because we broke above, we broke back in, and then this is the continuation over here. Now if we take a look over here, is that we can see this is a continuation, a clear 1 hour continuation for the next run to the downside. Now one would have asked me, hey Oscar, how did you enter with the risk entry? And I told you that some of the element in two touches that I normally look is that when I see there is a first touch and I see there is a second touch, I normally look inside it if there is this what we call a scoop, or like a V vibe formation within it, because more often than not it's just price telling you that it's not likely to form a third touch and it's likely to move from the second touch. Now that was a clear clue and information to me that, like, wow, this is the trade that I should be taking. However, the way we finished with this particular candle over here was more of a hanging man. So hanging man are still good, they are good to take. I know some of you take them, some of you don't, but myself I normally take them because we do count them into consideration. However, they don't appear that much, and personally I don't take hanging man formation that is single like that one. So I had to wait to see what the price will do next, and then the next candle likely finished like the previous candle, and that was a clear confirmation to me, like, okay, we have double rejection candle, which are the hanging mans. Okay, and the hanging mans are still telling us the message of selling off, because they are acting over here as bearish hanging man, so they are more likely to give me the selling opportunities. And these hanging mans over here, I did not see them as just an hanging man, I saw them as tweezer bottom. Okay, I saw them as tweezer bottom. Okay, tweezer bottom is something like this. You find candles, they have something like that. Okay, but with the tweezer bottom, they normally happen at the bottom of the structure. But this, I was seeing that because it's giving me more of the reversal message. So I saw it also, the price giving me same exactly message. So entered over there now, and then just put it my stop loss just above over there, just above over there. Okay, and then let it the price to do its things. Okay, then after we started breaking the structure around these particular areas, I moved to break even, and then at this stage the price started moving, and then I locked in 1%. At this stage over here we were running around 2%. I just left the price at 1, and then when I started to see the price again is moving over there, I just locked in 2.3. Then I saw the price just moved impulsively over there. I mean over there, nearly, it was roughly like technically it was roughly like 4%, right? Technically it was like 4% over there, 4 point something, not 4%, but it was 4 point something. Then I moved my stop loss just above over there, which was technically 3 point something, I mean 2 point something. And then after seeing that, I just looked the price for what it is, and then after seeing again we saw that retrace candle, I just went a little bit aggressive into that, and technically I just moved 4%, which was roughly over here. Oh, sorry. Yes, just to get it. Yeah, over there. So after we closed over there, we technically closed with that one, and I already locked in 4% at that particular stage. So the next opening candle just moved to the downside, but the next candle that closed just closed above over there, and I was tagged out for 4% net. Okay, bit of aggressive management, and the reason being is that I saw the price already is nearly approaching this particular area, so we already feel the movement like 90% of it. And like what I'm always telling you, the price always never lies. Okay, when we need to know where the price will previously move, we just need to look on the previous movement what the price did. So if I measure that, we were looking that as our first inflection. Okay, then the price took its time over there and then broke over there and kept moving. Now some of you would have been beating yourself up and said like, even though you were taken out by, but it still played out for 9 point something percent. I'm not bothered with that at all. I'm not bothered with that because I knew what I'm playing with. Okay, I knew what I was playing with, and just look at the price action. That was the more of a better decision to me because we are quite so near. And sometimes when you see the price is giving you something of that, so it's just kind of moves deeply. It pulls back very deeply. So what I would say is that if one maybe just opted to lock in maybe over there, they would have been still taken out by 2 point something, and then the price move into something more that could be even more disappointing. But for me, understanding that was my target areas of my first inflection point areas, that was really more than enough for me to be very fair and honest. So nothing was bothering me at that stage. But if you just locked in and then waited for more, that's still fine and fair, to be very honest. Okay, that was it on USDJPY. And one position that I took on USDCHF, just to this one over here, just to show you roughly. We are now at break even. Okay, we are currently at break even, so I'm not bothered with that. We are running deeply around 2%, so just waiting to see how the market is going to open, and then from there we are going to see how we can really manage and take advantage of that. But nevertheless, it was a great time to share these gems with you.